What if a $30 billion deal is what it takes to keep Elon Musk focused on Tesla? What happens if a single court ruling changes who controls the future of electric vehicles? And what does this pay package mean for Tesla shareholders and its stock price? On the edge of legal drama, boardroom politics, and shareholder fury, Tesla just made a historic move. A new $30 billion compensation deal for Elon Musk, meant to replace his previously blocked $56 billion package, has sparked both excitement and controversy. If you live anywhere on the planet and want clarity around global tech moves that affect your wallet, subscribe now to stay ahead of the curve. Let's break it all down. Tesla's board has just approved a new $29.1 billion alternative compensation plan for Elon Musk. Why? Because Musk hasn't been paid under his original $56 billion package from 2018, which was voided by a Delaware judge earlier this year due to conflict of interest concerns. So, what's in the new deal, you might ask? Well, it gives Musk 96 million shares at $23.34 each. It also requires him to stay with Tesla until at least August 3rd, 2027. Plus, there's a 5-year holding period, and it only activates if the original 2018 deal is thrown out by the courts. Tesla says it's the first step in recognizing Elon's contribution. But, critics are saying it's more of a desperate gamble. In January 2024, a Delaware Chancery Court judge struck down the 2018 pay plan, calling it legally flawed. Quite a significant turn of events, wouldn't you say? Reason? Elon Musk allegedly held undue influence over Tesla's board. There was limited disclosure about his relationships with those approving the package. And the shareholder vote that approved the plan was deemed potentially invalid. Tesla tried to reapprove the deal in June 2024, but the judge rejected that attempt too. That's why this new $30 billion deal was crafted, as a backup, in case the court ruling stands. Musk hasn't received meaningful pay from Tesla since 2012, despite building it into a $700+ billion company. The board says this package is not just a reward, but a retention strategy. Tesla's directors stated, "Elon has delivered extraordinary value to shareholders, and we must honor that bargain." But, there's another concern. Musk's attention is now split across SpaceX, which was formerly Twitter, the Boring Company, and the federal DOGE initiative that was launched in 2025 under the Trump administration. With artificial intelligence wars heating up and automakers under pressure, Tesla really cannot afford to lose Musk's focus. Here's where things get tricky. If the Delaware Supreme Court reverses the earlier ruling and reinstates the 2018 plan, then the new $30 billion deal becomes void. Musk doesn't get both. One replaces the other. So Tesla is essentially hedging its bets, giving Musk either the reinstated deal or the new one, but not both. And we still don't know when the court will decide. When the deal was announced, Tesla stock fell slightly, amid mixed reactions. Some investors worry this brings back the Elon Musk overhang. That's the idea that he might leave if not properly incentivized. But others, like Wedbush's Dan Ives, believe this is a net positive, calling it, and I quote, "a bold move that removes uncertainty and keeps Musk focused until 2030. The big risk? Well, if courts reject both deals, Musk could walk, or, reduce his involvement dramatically. Let's step back for a moment. Tesla is not just an EV company anymore. It's really at the intersection of AI, robotics, energy, and autonomous mobility. And in that battlefield, top AI engineers are getting 9-figure deals. So, if Tesla wants to win the artificial intelligence talent war, it needs Musk. Not just for his vision, but to inspire the talent behind the tech. Losing him or his focus could disrupt everything from gigafactory scaling to full self-driving development. That's why Tesla's board believes this deal isn't a cost, it's an insurance policy. So, will this $30 billion plan anchor Musk to Tesla, or will courts pull the rug again? So, more importantly, what do you think? Is this visionary compensation or, just corporate recklessness? Let me know in the comments. If you're holding Tesla stock or maybe even planning to invest, this is definitely more than a headline. It's a high-stakes legal and strategic game that could, well, define Tesla's leadership for the next 5 years. Hey, subscribe if you want real-time clarity on tech stocks, CEO power moves, and yeah, those AI investments that are shaping the world. We'll be following the court rulings, shareholder votes, and most of all, the next move from Elon Musk. Thanks for watching, and stay informed.